Hey, everybody, welcome back to Military Family Investing. Let's get right into it. Social Security versus income investing. All right, I released this article today, so it's hot off the presses. Let's dive in. All right, so first of all, we need to create a retirement system. Okay, I like to call it happy cash flow system. It's basically your retirement income, pensions, plus additional income from rents, royalties, dividends, all that stuff, right? And together, that's your lifestyle plan. All right. Now, Social Security can be part of that plan, but it should not be the plan alone. I work in the government. I've been in the government 24 years. All right. However, I want to depend on more than the government because it's not about the government today. It's about the government when you retire, right? All right. So you go back and check out the article, Social Security versus dividends. All right. So this is more focused on income investing. All right. The reason why I wrote this article is because last month, December 2022, me and my wife received almost $2,000 in dividends. It was $1,800 in dividends. All right. And so we've only been at this for 3.5 years. So I have another 25 years before I hit age 66. Okay. So think about that. Do you think I'll have $3,000 for Social Security, or you think I'll have like $15,000 in dividends per month? All right. So if I can do it, you can do it. Okay. So you can go online and check your Social Security benefits at socialsecurity.gov. So I think it's SSA, Social Security Administration.gov. All right. Check your benefits. You just type in your Social Security and everything. See what you're doing. They're predicting me to have $3,000 a month at age 66. Okay. I believe I could do better than that. Now, why I choose income investing versus this dividend growth or index funds. Okay. Income investing, you're investing for the dividends, you're investing for the income. All right. I'm not looking for growth. I'm not looking for any of that other stuff. I'm looking just for the income. And the way I grow my portfolio is by keep investing. However, when I receive $1,800, I reinvest 1,200 of that back into the portfolio. So I keep growing my dividends over time. All right. So my paycheck keeps getting bigger, 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 bigger. All right. And it's working for us. And I think it'll work for you. Okay. So part of income investing is this: business development companies, closed end funds, preferred shares, high yield blue chips, mortgage REITs, dividend ETFs. Okay. So all those equal income investing. Now I have links to all the articles, some articles about you can dive further into those. All right. Cause I've been writing about this stuff for almost 3 years now. So the thing about dividend investing is you buy securities. You buy, say, a closed-end fund. Say you spend $1,000, and the goal is your first goal is to get your $1,000 back. Okay, it might take 7 to 10 years, but after that, you keep the assets. Okay, you keep those closed-end fund stocks, and then you just keep going. Then everything after that is just a positive, right? You have all your money returned to you. So that's what I do. That's what I visualize when I'm income investing. All right. Put my money in, keep it, it pays me back. And then I just keep holding the asset. And then I could redeploy that money into more dividends or real estate, whatever I want to do. Okay. I got really smart on income investing by reading Seeking Alpha and also by reading this book, all right, the bond book. Okay. So everything pretty much in income investing has to do with bonds and their relationship with stocks and how they relate to each other, treasury yields, federal funds rate, blah, 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 blah. Okay. So the simple list of how the bonds work is it starts with the federal funds rate, right? Right now it's about 4.5. And then your treasuries, right? So your treasuries, say your 10-year treasury bill is going to be not bill, but I always forget the middle one. There's bills, notes, and then bonds. So notes. So the 10-year note is going to be based on the 4.5% federal funds rate. So it's going to be potentially around 4.5 to 5%. And then your mortgages reset off of that, municipal bonds, corporate bonds, high yield bonds. All right. So you had to know those relationships. Okay. And then stocks play off of that too, because if I can get a 4.5 safe with the treasury, 100% safe, then the risk for taking stocks is going to be higher, right? So higher risk means higher yield. So maybe my stocks go up to like 5%. That means the price of stocks go down to increase that yield. All right. So long story short is you have to really understand that and keep reading, reading, reading. All right. It's not going to make sense at first, but you just have to keep reading. Okay. And then following it, understanding it, flowing through it, and yada yada yada. And then you'll feel very comfortable with what you're doing. Okay. There's no risky investments. There's only risky investors. Okay. And if you don't know the information, if you're trying to this, not research, you're going to feel very uncomfortable. All right. So I'm very uncomfortable with income investing. It's not for everybody, but it does work. But you gotta have the right mindset. You want to grow your paycheck, not grow some imaginary capital gains. Like, oh, I'm up 3,000% in the stock market. Like a lot of people were up in Tesla. A lot of people were up in Nvidia. Right now, they've come crashing down. Okay, even Apple stock came crashing down. Okay, so bragging about capital gains can be taken away from you. Even your house. Oh, my house doubled in equity, and then somewhere comes along, and then is back down. All right. But your income, all right, your income keeps increasing, increasing, increasing. All right. So that's why I'm an income investor. I think you can do a way better job than Social Security by just focusing on dividends. Okay. So to create dividends, you need to create a budget. You need to stay under that budget. You need to create savings and investings with that additional money. Okay. So it's a long term plan. Uh, I'm writing tons of articles, so just go to my website. I have like 1,100 articles, right? So just go in there. All the articles say the same thing: save, budget, invest, and somewhere in between that. And if you don't have money to invest, then you create. Okay, that's what I'm doing now. You create. That means you create content. All right, that's free money, but it takes work. Okay, so all those things together, I think with the right motivation, I know for sure you could be Social Security, even if you're 50. If I could do this in 3.5 years, you can do it. And I have a full-on family. I have a house. I have 3 mortgages, and I can do it. You can do it. All right. It just takes hard work, discipline. Okay. So I listed out some different stocks I invest in across business developments, mortgage REITs, closed-end funds, blue chips, dividends, ETFs, and preferred shares. Okay. So all those together form my income investing, plus a lot more, of course. But I started with $25 a month. I'm sorry, 25 cents a month for Papa John's. Okay. That was 3.5 years ago. So 25 cents was my first dividend month. So I wasn't gifted an inheritance or none of that garbage. All right. Now we're up to $18.25 last month. Okay. Now, granted, we had a lot of special dividends that month, but again, this is it compounding. The power of the compounding effect. Okay, is very real. Right. It literally just took off from like to 1,800. I wasn't expecting it. And they announced all these special dividends and all kinds of things were happening. And, we almost hit $2,000. Okay. So at the end of 2023, hopefully I'm looking at 2,500, maybe even higher than that. Okay. It's very real. Okay. It's very real, but you got to jump in. You have to be in the market for when these good things happen. Okay. So with that being said, shoot towards your financial freedom now. If you're planning now that Social Security is going to be your plan, stop. Okay. Unless you're 55 and you have a couple more years. But if you're under 50, if you're right at 50, you have time. All right. Stop spending so much money. Live below your means. All that garbage that people tell you, it works. And you'll have more freedom by having a budget and saving and investing and building income, dividends, than you will by just going out spending on debt. All right. You'll feel better. You'll understand money. You'll appreciate your money. And you can do it. I did it with a family, with a wife, kids, right? Big kids. So that means you can do it. All right. So grab this book. I like this cover. I like the colors. So grab the book for free, download it, get into it. And I'm going to start trying to post a little bit more, right? Trying to post at least a couple times a week. It's hard. Like I said, I have a full-time job. I'm a full-time writer on my off time. So I can't put as much effort as I would like into YouTube, but it is what it is, right? No whining from me. I got to just put the work in, get that military retirement, and then I can free myself up. Okay. With that being said, I am off to the races. See you guys later.